And right now, we're seeing such an increase after COVID in terms of scams, in terms of cyber-enabled fraud, that it's honestly scaring. This is the highest financial economic crime that we see globally. And there's no only one vulnerable population. Everyone, all of us that have a phone, a tablet, a banking system on your computer, we're all vulnerables. And it goes to a different type of security that we think of going to the streets and being safe. It is an area where governments are being challenged, not necessarily have the capacity, cyber police, cyber security. So it is a big challenge that I think from an integrity perspective, but also from a financial inclusion perspective, we have to tackle together.
Yeah. Well, thank you so much. I think it's very important also that you actually emphasize the distinction on the domestic payment system and obviously the cross-border challenges that we see. I think we should also keep that in mind. Let us now move to this broader topic on actually leading innovation, the next bigger bucket here. And of course, this question now goes to the regulators here on this panel. And I wanted to start with President Sierra, with Marcio. Now, is there a proactive role in driving innovation? Which aspects of the payment system need to be modernized, and what impact are innovations such as fast retail payment systems and open finance frameworks? What does it mean? What is the potential impact on financial inclusion? Is there anything in it?
Okay. In Honduras, we have two institutions that are separated. Is the central bank that is in charge of the payment system, and the National Commission of Banks and Insurances that regulates and supervises the whole financial system. Currently, most central banks in the world have or are modernizing the infrastructure of their payment systems, moving toward immediate interoperable cross-border and low-cost payment schemes. Look, what we were saying before, which make it easier for the most vulnerable population to access an agile payment system from the comfort of offered by mobile devices, taking advantage of wide coverage of cell phones, services with smart technologies or USSD services. In Honduras, all these elements have been taken into account by the central bank in this initial phase of analysis of the implementation of an immediate payment system that provides the population with novel payment solutions, mainly for those sectors not served by traditional banking with limited access to deposit accounts or by the use of complex online banking services interfaces that discourage electronic transfers. In this sense, it is believed that access to payment services from mobile devices can be more effective than savings accounts, mainly because our national statistics have shown us that 79 out of every 100 Hondurans have a cell phone line, while only 17% of adults over 18 years of age have savings account with financial service provider. This is the huge difference between one service and the other one.
Bernard, do you want to come in on this one? Rogerio?
Good. Yeah, thank you. Well, we at the Bank of Mozambique, we have done a few things on that in terms of innovation. The main focus was on the payment system and infrastructure, really. That's where most of the big change have taken place there. First, we really had to upgrade what we had. in terms of the traditional electronic system, the automatic clearing. We have to add some additional upgrade. But the most important one for us over the last 2 years or 3, that were really a game changer in terms of financial inclusion, was we now have a national switch. For banks, mobile mines, all of them, in a multilateral. That makes a big difference. It was a major exercise. It took us nearly almost like work for 5 years to get to that. We had to have some strategic alliance help. We got the help from one of big players in the US who worked with us. Euronet was there, but it took us about 5 years just to get it done. But that's a major important thing. We now have also effectively a real-time gross settlement system in place since last year. These two things made a big difference. While our access and use indicators were moving just so almost not moving, once we got that access level, they just jumped. When you look, if I had a chart to show you that, it would be interesting to see how suddenly, because we have interoperability, where mobile money connect to banks and so on, that provides access to very remote areas that were not possible before. Every district in Mozambique since 2023 now has one access point for everybody. It's a major achievement. It was not like that. If you look at the indicators 5 years ago, we had at least more than 10 districts with no financial services. So that's a major gain. And that is a result of technology, investment, innovation, technology, and training for us. Related to that, we had to do a lot of financial literacy because people need to be comfortable. They need to feel safe as they use mobile money, as they transfer money, to make sure that their funds are not getting lost. Training for consumer, training for the industry too. It's not just consumer. You know, we have problems for the industry to come up, but when the regulator, sometimes the regulator is behind the industry, but sometimes you have a situation where the regulator is ahead of the curve, and then has the responsibility to bring the industry along, which means they have to invest, and they are reluctant to invest. It costs money. Sometimes they are suspicious, especially when they are doing well financially. This has a cost, as an expense item. So that's where we are, investing on consumer literacy, working with the industry, sanctioning institutions who do not protect consumer, in particular consumer data. So that's the kind of things that we have been doing in Mozambique over the last few years. I hope I addressed. Thank you.
Yeah, fantastic. But I need to drill down a bit further. You said there are situations when the regulator is ahead of the industry. Can you elaborate on that?
It's very
point?
important.
Please.
You know, sometimes we feel like the regulator is the impediment for the private sector. Maybe in the advanced economy, that's not true for our societies. You know, you have established financial systems. They are doing very well. They are making a lot of money. And I saw it. While most of the industry, financial industry in the world, they were making losses during COVID. In our part of the world, they are making huge profits. Then the question, when you approach this institution to embrace technology, to change their way of working, to help consumers, to operate in the most remote area, they look at it. They have no incentives because they're doing well. So you have to mandate them. And sometimes you say, hey guys, you made a lot of money. You are not here just to make money. You have to service the communities where you are. And this is very important. So we are going to require, and if you are not, we have a system to shut you down or sanction it.
Okay,
so that's
okay,
the way we
hold
did.
on. That's great. Hold on. Actually, my next question would actually go to Elise, but I have to deviate from that. What do you think, Rob? You have to mandate them. What do you think? Come on.
Well, I like working with regulators, so you know, I think it's important for us to work together, especially when we're talking about two things that I think are really, really important: financial inclusion, and we should be real about this. The industry can address financial inclusion; it can address the entire economy, but there's truth in the statement that maybe industry isn't always naturally inclined to, or it might be the last part of the economy to address because it's perhaps the least profitable. You may need to be looking further into the future than sometimes companies do. I think there's a tendency for a lot of companies to look at next quarter or next year and not so like 10 years from now. But the value in working closely in collaboration with the regulator is that we can find incentives around which we can align and we can work together. The second key area where regulators and industry need to work together, but there's a great opportunity in working together, is the safety and security of both the system, but and also the individuals who participate in it. And that's really important as well. So maybe we sort of address financial inclusion for a second, and then I'll put security to the side and we'll come back to it for a moment. In terms of financial inclusion, in terms of finding products that reach more people, what we really need is innovation, right? The more innovation we're able to pursue, the more opportunity there is to go address all parts of the economy, with a goal, with a stated goal and a desire to go do that together. So you know, if we go work with a central bank and say our goal at MasterCard is to get more people into the economy, we think that benefits us. We're willing to do things that we might not otherwise do in order to play a longer game purely from a market standpoint, if we only think about it from a market standpoint. But hopefully other companies like MasterCard, we do consider ourselves to be an important part of the community. So we do see that there's a community service element to all this. But even putting that aside for a moment, there's a strong incentive, if we do this right, to think long term about those people that we can bring into the economy now that can do more in the future, right? So if we have an end goal to work together toward that, then the question becomes, how do we work together toward that? And I think one of the mistakes, you know, we talk about some of the mistakes that the industry makes, and I'm cool to have that conversation. But there's also mistakes I think we can make from a policy and regulatory standpoint too. And from where I sit, one of those mistakes that we can make is we can over-index on a certain outcome, and so we try to engineer a certain outcome. And if we try too hard to engineer a certain outcome, or a certain technology gets preferenced or depreferenced, deprioritized, it harms innovation, right? It makes people less likely to innovate because they have to pursue a very particular path. And that's a mistake. That reduces the number of options and opportunities that are out there, and it reduces to some degree those alignment of incentives that we can get where industry can come in and be really a significant help. So our preference is always, let's number one, think about guardrails. First off, what are we trying to achieve? What we're trying to achieve is more people into the economy. What are the guardrails that we want to put in place around that? Guardrails are really important. We obviously want safety and security. We want fraud prevention. We want to protect data. But we also want to really create competition and foster and enable competition. At MasterCard, we think competition in this space makes all products better. It makes our products better. It makes the products that our competitors develop better. And so if we're working together with a central bank or a regulator on a goal of bringing more people into the economy, we have those strong guardrails in place. We align our incentives together, and then we open it up to competition. We believe that that's the greatest opportunity to bring more people into the economy. But restrictions on outcomes or a desired or specifically preferenced outcome reduces that incentive to come in and compete. And that lack of competition, I think, harms the potential here.
Thank you so much. I think we can hear you, and I think the positions are clear. Let us go back to Elise. And you know, when you listen to all this, the FATF has examined both opportunities and risks of technological innovation for the integrity of the financial system. Now, my question is, how can we best balance the opportunities arising from digital transformation with the risks from innovative products such as fintech and also virtual assets. Can you share with us?
So when I spoke before about technology and innovation, I spoke about the cascade that goes into two rivers, right? And I spoke first on what are traditional wire transfers that now are payments in general because the industry has transformed and where we're looking there. But then the other river, and maybe that river was created because of lack of innovation from the governments itself, are the fintechs and the virtual assets. In a way, they came up as an alternative to the traditional system. In the FATF, we foster competition, we foster technology, we're technology neutral, but what we care about are the risks that they bring together with the opportunities. So we've been pushing for innovation and for new technologies to be used both by the private sector in the products and services they provide, but also by the authorities in the way they supervise the entities, so what we call subtech, which is supervision based on technology, and also on the virtual assets, which is a new sector. The FATF was the first international body to set standards, to define what they were, what we wanted at the expectations from the authorities. And so these standards have been in place since 2019. We basically ask governments to determine whether they want to forbid them in the jurisdiction or they want to allow them. And both of them are okay. If they want to forbid them, then they need to make sure they're not taking place within the jurisdiction. And if they want to allow them, they need to regulate and supervise. So we set the rules on how that regulation has to take place, how that supervision has to take place. And what we want to make sure is that there's no safe haven. So in an international global setting, you need all the links of the chain to work together because we're only strong as our weakest link. So that's where we're working. It's been a challenge. Some countries have embraced and done a lot on this space. Others are working. So we're working in supporting these jurisdictions. And the message from the FATF is clear. We support innovation. We want to work with these new technologies. We want to work with the private sector. So we're increasingly supporting public-private partnerships. We have conducted a couple of reports, and I think there's a lot of studies for the authorities here in the room and private sector representatives that you would benefit from the FATF, both in terms of the risk and the opportunities of these technologies. We have a couple of papers, recent papers, that talk about how they can help manage the risk, how they can help the authorities with their supervision. So in the nutshell, the message is we want to foster new technologies, and we want to make sure that the authorities do not lock in the old ways of doing things. Because it's easy to say that you want new technologies, but if you come to the supervision and ask the private sector how they're doing things in the old way, then the message is contradictory. So I think this takes me back to the supervision. We need to not only focus on regulation, but on action and institutions. Because at the end, it's about the agents of change. Regulations are very relevant, they are the starting point, but it's about how do you develop that on the ground. And that's what we're focusing on now.
Well, thank you very much for sharing. Rob, I briefly wanted to come back on your experience or your assessment of the impact of these sandboxes, innovation hubs, tech sprints, and others. Can you share briefly what is your experience?
Yeah, thanks. I think in the spirit of working together with the regulators, I like these things because I think they can provide opportunities for us to experiment together, and that experimentation together I think is really valuable. Like a sandbox type approach can help regulators and people who supervise the payment system gain a better understanding of what technologies are out there, right? But it's not just technologies; it's business models as well. And I think that's really important to think through: is that there are different business models and understanding the way that companies might come, the private sector would come into a country and compete for a certain segment of the market, and what that business model looks like, I think can be really, really valuable. It also gives us an opportunity to talk about risks. And I mentioned before, kind of set it aside, but for me, fraud is a really, really, really important part of this conversation. Fraud, safety, security, data protection, all of those things sort of go together. But left unchecked, fraud can become a really significant hidden tax on an economy. And it also can discourage people from entering into a digital economy because of a fear that they'll be harmed in doing it, right? And so today, as the digital economy continues to develop, as certain technologies, for example, artificial intelligence and other technologies, make it easier to access more people and for more people to access the digital economy, it also enables an environment where people can prey on those people. And so we've got to stay closely aligned together to think about what is the minimum necessary standard that you would require as a regulator or a supervisor, that you would require for a company to be in the market providing payment services. And I think that's really, really important to understand that really well. What does it take to stay ahead of the people who are trying to perpetrate fraud, right? What does a company need to have in terms of investment in their payment systems or in their products and services? And how much do you want to require that in order for the system as a whole to gain confidence of people that you're trying to address? So I think these opportunities to engage are really, really helpful.
Thank you so much. I think that's a nice connection now to the third bigger bucket that we outlined earlier, but we talked already a little bit about it. But I would like to know a little bit more from our members here on that panel, and this is really around collaboration. Yeah. Now, what innovations are we seeing there in collaboration between financial regulators and the private sector, actually to build solutions to shared pain points? And what are the lessons learned here? So maybe we can hear from the three of you.
Yes, first, a primary lesson that we've learned is to engage the industry early and to get their buy-in when we have any new innovation or new initiatives. Early involvement is very important for both regulators and the private sector entities, so we can identify shared pain points, align on goals, and co-develop solutions more effectively. For example, in the BSP, when we wanted a national QR code that was interoperable and that could be used commonly by all digital payment providers, we needed the buy-in of the private sector. So we, as the BSP, aligned with the industry need to widen and deepen adoption of QR-enabled payment by consumers. We have in the BSP a program called the Paleng QRPH, which means basically that we are promoting cashless payments in the public markets and in public transportation. And with this advocacy, we go side by side with the private sector. So when we go all around the country, the private sector is with us, giving financial literacy, financial education lessons. And what Rob was saying, whenever we try to talk about what we want to do, cashless payments, the market vendor initially will say, we don't want it because we're scared that we might lose our money. The BSP cannot do it alone. So we, with the private sector, they help give us a digital literacy lessons to explain that your money is safe. So again, it's really cooperation and the buy-in. But of course, as much as I would love to say that collaboration is important, we've been trying to do that with open finance. We've been trying to collaborate with the industry on how to promote open finance. But we still need buy-in. It seems that, I don't know, maybe some of you will have an idea on how we can promote open finance. We've been talking to the industry on how it is important. Open finance is important to financial inclusion. Her Majesty Queen Maxima already talked to the industry to say how important it is, but we're still trying to work that out. So again, it works, and in some cases, it's still a struggle and a challenge.
Thank you so much. Yeah. I mean, I'm smiling, I'm laughing, and you maybe imagine why. Because I would ask, of course, Rogerio, should we mandate it? But don't answer now. Let's go to Marcio and please share with us on the collaboration. No? What are your experiences there?
Yes. Yes.
No. First Marcio and then Roger. You can warm up.
In this case, for us, the creation of working forums and discussion of legal framework binding on financial innovations are part of institutional efforts of regulators to make technological regulations more flexible and adapt them to digital transformation processes that are consistent with objectives of inclusion, efficiency, and financial innovation. In Honduras, with the creation of the Financial Innovation Hub at the National Commission of Bank and Insurance, we have guaranteed the direct, personalized, and effective communication channel to ensure a dialogue with financial innovation initiatives, evaluating possible changes to the regulatory framework and monitoring the technological and commercial advances of the sector and potential supervisors. We have had some dealings with enterprises that provide services, but we, at the same time, the National Commission of Bank and Insurance have to protect the people from frauds. And in one case, for example, we had a problem with the electronic wallets because the phone companies were issuing a lot of electronic wallets that were not having secure guarantee that belongs to the people. So we issue a regulation that they had to be monitored by biometric systems, or in the case of not intelligent phones, they have to go and present their identification personally. In that case, we found 350,000 wallets without no identification. So we had to close them because they were make fraud with that mean. These working forums organized by the public sector have strengthened working relations between different actors. In the case of Honduras, the permanent coordination between the National Commission of Bank and Insurance and the Central Bank on financial innovation issues enabled the context for the creation of the Fintech Association of Honduras, given their interest in having union representation in working session with the public sector. These have had a lot of very good results because they have the opportunity to talk about their problems. On the other hand, this fluid and formal approach between the two sectors has allowed for more learning spaces about fintech business in the case of regulators and about the generally complex regulatory mechanism for the private sector.
Thank you so much, Marcio. Now, Rogerio, there is a bit of a hanging question on open finance. I'm sure you can come back to it, but also maybe you also want to share similarly to Marcio, a bit of your experience on these collaborations.
Yes, okay. I would say collaboration is critical. It's a must. There is no way we can avoid it. And I think the central bank, at least the way we do, we take a lead on that. Because if we don't collaborate, we basically have to substitute the private sector, and it will never work. So it's not that we can avoid. The question is, how do you get it done in a reasonable time frame and get quick results? That's when the problem starts. And then the private sector is not always homogeneous. There are some are more willing to collaborate than others. Some quickly, it's part of their business model, as I mentioned there. They will quickly collaborate with the regulator and things keep moving. The question is, at some point, what do you do with those, for some reason, in general a few, 2, 3, maybe 10% or 20% who are falling behind because they don't want to invest in technology. They don't want to spend money on that. and hoping that you will fail. Sometimes when they see, well, we don't think this is going to work, so why should we spend money? And then at some point, we did it in national switch, and then finally it works. They didn't invest, they are behind most of the industry, but they're important players because they're part of the payment system. So then they're creating troubles because they did not invest. At that point then, you have to shift gear. You move from collaboration and you say, now it's time to say either you do or you are out of the system. And you give a deadline. And they say, you know, that's the way, the direction. There is no more talking about this. We give you this amount of time to address the issue. We are willing to help you. If you're not willing to work with us, you better leave the system. That's the way it is. So it's a two-stage approach, real to that. So at some point, it becomes mandatory. Thank you.
Well, thank you. That's a viewpoint. That's a viewpoint. Wow. Well, I know that there are perhaps a couple of questions in this audience, which I think we are going, I think you have to be a little bit patient, but I saw you already. You will be asked soon. But, you know, I also want to, before we go back to maybe some additional comments and experiences from the audience, I also wanted to really make use, Elise, of your presence. Because in light of all this, what we are discussing here, of course, there's an interesting question now, I think also for the FATF, and you touched upon it, no? With regards to the innovation in these collaborative partnerships that we have seen here, you yourself have spoken of the importance, no? Of the importance of strengthening the FATF global network. So the question is simply, how do you plan to better involve developing countries in the process of standard setting? Any plans on this side?
I don't remember which was the name of the presenter in the panel before in the introductory remarks, but I think the phrase was, we cannot let anyone outside of inclusion or no one left behind. It's the same in the FATF. We cannot have integrity by leaving countries behind. In my time in the FATF, I led some of the work that had to do with coordinating what we call the global network. The FATF has more than 200 jurisdictions at the global network, which are divided in small regional bodies, 9 regional bodies. And at the FATF, the difference is that we set the standards, and then at the regional level, they are implemented, they are assessed, and we work together collaboratively. But there is an issue when you set the standards in a room where not everyone is at the table. And that is a reality. And it is within my presidency interest and supported by the membership, very importantly, here I'm speaking on behalf of the membership, to be more inclusive, to be more transparent, and to be more diverse. So the way I am pushing forward is during my presidency, I will invite jurisdictions from those areas of the world that are underrepresented or not represented at the table of the FATF, namely Africa and the Caribbean. These will be 3 jurisdictions per year. They will be guests at the FATF with a place at the table under their flag, because we want to make sure that we have more voices at the table to have all the inputs we need to set the standards. I recognize these might seem small, might seem like 3 jurisdictions when we're missing many voices, but we need to start somewhere. This is a presidential initiative that, as I said, has been endorsed, and I hope that it shows the value of it, and then the membership can take steps in the future to broaden those voices. Another step that I'm taking is I'm visiting the regions. I just started in the presidency, but I was in Latin America at the regional level in GAFILAT, the Gafi of the Latin America, back in July. I am coming from Kenya. I was in the Eastern and South Africa region last week, and I will continue to visit the regions to make sure that there's engagements with the members of those global networks. There's a value in getting closer to the members, but also in bringing them closer to the FATF. And it has to be truly a two-way communication that I want to foster, and that I know the membership is behind. So maybe I've only been here today because I came back yesterday very late. I wasn't able to join the dinner. and I'm leaving tomorrow early in the morning. But you probably saw the ones that I spoke during coffee. I'm actually pushing doors. I was trying to speak with the African Union, with countries in Africa. I really want to knock on doors and create engagement. And I think that's why I'm here today, because it's important to work together. We tend to work in bubbles. There's the bubbles of the integrity, the FETF. There's the bubble of inclusion led by Yafi. There's the bubble of data protection led by the GPA. But we need to break those bubbles, and we need to lead by example to the private sector. We need to be in the same room, financial inclusion, integrity, and data protection. Because that's the same that needs to happen in the private sector, where you have the market, the integrity business, and the data protection developing the products and the services. So I think my presence here and the spirit that I will be leading speaks to that, and I hope to bring some change and that we can do it together.
Fantastic. I mean, this is obviously music to our ears. Just a brief remark. I'm sure we have more opportunity to discuss, if not today, then sometime later. But I mean, you can also make use of the AFI network in this, of the AFI network in the sense, because we do run regional initiatives in each of the regions where the developing and emerging economies are situated. So I think that could be perhaps a way also to save some of the transaction costs to reach out to many people at a time. So I'm just mentioning that. Anyway, now, yes, oh my God. No, I'm looking at my watch and not at yours. And I'm at 1 hour and 9 minutes, and we have 1:30. Okay, I have this gentleman, yeah? And then I have another gentleman in the front. And then please identify yourself, yeah? And be brief with your question. Yeah, number 1 is over there. Number 2 is, no. Oh, number 1 is over there. Number 2 is over here. He was first.
Number two.
Thank you. My name is Gitamburu from the Central Bank of Kenya. Quick question to the panel, and it stems from what the speaker from MasterCard said at the beginning, that technology does not always have to bring a divide. I wonder what the speaker and the other panelists think, maybe the governor from Mozambique and the FATF president, about something that the panel hasn't discussed, which is the role of mindset. So we've talked about sandboxes, we've talked about collaboration, dialogue with the private sector, but what's the role of mindset? And I'm speaking this on the experience of Kenya. You're all familiar with this, the M-Pesa service that was launched in 2007 under the leadership of our former governor who's in this room. We didn't have a National Payments Systems Act, we didn't have a sandbox, but M-Pesa has been able to achieve what it has achieved. We are transacting 21 billion transactions every year, about $277 billion. So what's the role of mindset? Because that, I think, is what will really move the needle. We are building upon that innovation with that mindset of technology as an enabler. Just this year in July, the Central Bank of Kenya launched what we call DAO CSD, which is a mobile application to allow citizens to buy government securities. Since July, it has opened, I think, 50,000 accounts, okay, more than double what we've opened over the last 30 years. So all that we've done, we just an attitude of technology as an enabler. So what's the role of mindset, okay, in enabling the power of technology to bring about change in our countries? Thank you.
Thank you for the question. Number 2 question is coming from here, and then I have one over there. Yeah, please. Please be brief.
Yeah, thank you very much for the insightful discussion. My name is Shaukat. I am from the State Bank of Pakistan. My question may be taken from any of the panelists. As for the latest fintech index, it's still to date around 1.7 or 2 billion people are, financially not included. So, despite numerous attempts by various jurisdictions and various multilateral bodies as well for the last many decades, and numerous, regulatory interventions by the regulators, that may be the branchless banking proposition, that may be open banking framework, that may be the sandboxing, or the other regulatory enablements. Even the last mile problems have not been, solved. So what may be the structural flaws that still today a larger number of people are not included? And even the people who are included, the active accounts seem to be on the lesser side. When we see the accounts, the account base may be large, but the active accounts, the activity that may be not so, too much. So, thank you very much.
Thank you very much. We take that. Rob, I think on the active accounts is something I would like to bring to you. The mindset, you can volunteer on that one. I have one last one from Deputy.
Thank you very much. Paul Mendy, Second Deputy Governor, Central Bank of the Gambia. My question is to the President of FATF. I take note of something you said, although not very clear to me, as to do with the international payment system not standardizing over a number of years. And I'm grappling with this issue because you know very well that something that Dr. Hani touched on, the issue of virtual assets, has really entered the financial system to the extent that some countries are recognizing cryptocurrency as real currency, others are not. So what do you do with regards to standardization? Because currently, globally, there has been an acceptance of some kind of watered down AML CFT standards. But nonetheless, we are all aware of the challenges of fraud and money laundering and all the risks it poses to the financial system, including terrorist financing. So really, I'm trying to understand what you meant by, or maybe what are you looking for in a standardized payment system globally, where we are going to maybe use similar currencies or standardize virtual assets, because that's the elephant in the room in the current financial system that we all have. Thank you.
Thank you very much, Deputy Governor. I propose we go the reverse order and start with Elise on that question. Then we come to the dormant accounts versus the active accounts question. Then we would come to the mindset. Please, Elise.
So I'll address the last question since it was directed. I would probably need a session with you of 2 hours to speak on this. But in all seriousness, just to be brief, the issue with international cross-border payments is that it was designed to cover traditional wire transfers, right? And right now we have a payment system that is much broader than that. So the question that we have from a government perspective is, similar services should have similar regulation, and if so, then that's what the G20 is grappling with. Like, what do you deal with credit cards and other kind of payment systems to bring them to the same level of regulation? So that is a question that central banks are striking now, and as part of that, there's a new format for the ISO. So the FATF has its part to do with it in terms of the integrity of those payments, and that's why we're working with the central banks into how do we make those payments also safe. So it's about making them accessible, cheaper, faster, but also safe and secure. So that's where we come into play, and that's why we are part of that conversation. And for us, if you want to get into more detail, that would be recommendation 16. And that takes me to the part of virtual assets, which is a different sector, different asset. You cannot regulate an asset. We cannot regulate money. We cannot regulate a virtual asset. What we regulate is the intermediation of those assets. The onboarding, the offboarding, the exchange, the transactions. That's where we come in and what we regulate. And the most important part of it is those intermediaries to be registered or licensed. We have that flexibility to be supervised, and also for the transactions to have a minimum information. And that's why we call it the travel rule, because this information has to travel with the transaction. Because of the virtual assets nature, the blockchain, it's public. So that information, there would be a data protection issue. So we had to work with the private sector to create technology for that information to travel in a secure way. That technology is there, and that is what the FATF is asking governments to implement. And that travel rule means the virtual asset transaction needs to travel with the information of who is sending the transaction, who is receiving it, the amount of the transaction, so we can actually follow the money. Now, not all virtual assets are used for illegal means. A lot of people in many countries, because of the fluctuation of their money, they use it for financial inclusion. So you see some countries, for example, in Argentina, where people earn their money, salary, and immediately put it in a virtual asset. You see other jurisdictions like El Salvador that have embraced it more broadly. You have jurisdictions that have forbidden it completely. And that's okay, governments can choose how they go, but in the sense from the FATF perspective, what we need is, where there are transactions and they're allowed, that information has to flow, because they have been used for terrorist financing matters. A lot of ransomware is paid on virtual assets, and also on money laundering. So not sending the message that this is for the whole sector, but the risk is there just as it is with money, with regular fiat, and that's where we come in.
Thank you so much for answering a complex question so comprehensively in a short time. Thanks a lot. Rob, just before you start, when you mention all these all these accounts that you have created, how many are dormant out of those?
Well, so if I could actually, I want to come back to something Elisa said in her response, because it's really important. First off, FATF on the travel rule has done a great job of engaging with the public side, with the private sector. And really, really pleased with that collaboration. I think there's ways to go, and I think there's further opportunities to modernize. But I really like what FATF has done to bring in the private sector, because these challenges that we're talking about aren't challenges that we can solve in a college, university classroom or some ivory tower somewhere. They're actually challenges we solve on the street, right, in the transactions day to day, and it's important, I think, for that strong public-private sort of collaboration. So I think it's very. Thank you for mentioning the opportunity to work together. On accounts, I guess I'll just say it's always an interesting topic and question, and there are many accounts, millions of accounts in the world today that go completely unused. Those unused accounts represent opportunity for fraudsters, for people who want to launder money, for people who want to engage in predatory behaviors. They also represent what I'll call sort of a carrying cost to the organizations on which they sit. That is, I'll just say, sort of tends to be a very inefficient use of time and capital and innovation and opportunity. So beyond the fact that a dormant account represents, I'll say, risk to the system and to individuals, it also, having those accounts and having to maintain them and stay in touch with people and all those things actually limits the opportunity to innovate in other ways. And so I think that's why you see a lot of companies take a look at dormant accounts and say, we're going to institute a policy where we're going to close these accounts at a certain point in time. I think that it generally relates to fraud, AML, like that kind of concern, but also a system that's full of accounts that don't get used means that there's a drag on the system. We want to more efficiently deploy capital in things like new products and services that can address a part of the community that's not addressed today.
Well, thank you so much. Now, on the mindset question. You want to come in, Rogero? On the mindset. What kind of mindset is needed? I mean, that was the question. If you can be brief.
Well, that's not an easy one. You need to be open-minded, clearly. I mean, if you're not open-minded for technology, for innovation, and be willing to take risks, that's very important. When you start a journey on the innovation, on regulation even, on supervision, there are some risks involved. Things may not work as planned. Things may be difficult, but once you are clear about where you want to go, you need to be persistent. Even when you make mistakes, you correct them and you move forward. That's the idea that we're trying to install. It's okay to make mistakes, there's nothing wrong about it, but you have to learn them. So you should not just say you don't want to do because you're scared to make mistakes. And sometimes we see that in the issue I was referring to in the past about the private sector. Sometimes it's the reluctance to join because they're scared things may not work, and that will reflect poorly on their performance, on how they have been assessed by the board, by the shareholder. So that's all I would say at this point in time. But openness, collaboration, and willingness to take risks, that's the way to go. Thank you.
Well, thank you. Now, I would like to give all the panelists here an opportunity to say a final word. And if you could combine this, perhaps, very briefly, with your wish. When I look at this topic here, innovation for an inclusive world. So what's your wish? What are you taking home? Not as a lesson, but as a wish. Thank you so much. Werner, please.
I was actually asking Alfred because the question about dormant accounts struck me. And we keep talking about innovation with regard to technology, but innovation also involves the design of a particular product. For example, when we had the BSP Financial Inclusion Survey, we asked people why they didn't open an account. Number one is because they didn't have money. Number two was because of the complexity of opening an account. We have what we call the basic deposit account, meaning there are no dormancy fee, no maintenance fee, and at 100 pesos, which is like, what's 100 pesos in dollars, I think, two US dollars, you can open an account. So again, and then you could open the basic deposit account just by giving any ID given by the LGU, the local government unit. So again, that's what we have to do when we want to increase transaction accounts. We make it easier for those who we want to serve. Number two is, of course, the BSP has always been a champion for responsive and responsible innovation. When you say responsive, we want to be responsive to the needs. Customer comes first, number one. Responsible meaning, which everybody in the panel has been talking about, we have to involve consumer protection and also financial literacy. And I guess our vision for a responsible innovation is linked to our vision for our national strategy for financial inclusion, where we want people to be financially included. Financial inclusion leads to inclusive growth, but the person that is financially included must also be financially resilient and financially healthy. Thank you.
Thank you so much, Berna. I also take this as your wish. I think it's a very nice ending. Rob, what is your wish? And then we just continue. Give us 30 seconds.
Well, I need to spend more time in Mozambique. That is clear. So I wish for that. To hang out together. Actually, that's what I want. My wish is that regulators and policymakers spend more time with us. Help us understand you and what you are trying to achieve, like deeply understand you and what you're trying to achieve. Because I think there are many opportunities to align incentives and create something of real value for the communities that we operate in and that we serve. That deeper collaboration around understanding what we're trying to achieve, what is a central bank trying to do in an economy, and really asking how can we do that together is a really powerful opportunity. So I'd like to see more of that. I'd like to see more constructive collaboration. I think it's always a mistake when we get to a point where, I'm talking to someone at a central bank about something that they're doing that I worry is going to cause harm to the payment system or the economy or slow down competition or innovation, but we could achieve the same objective from the beginning working together. So I'd much prefer that, and I'd like to see more collaboration.
Thank you so much. Marcio, briefly.
Thank you, Alfred. I was thinking about my country because Honduras is one of the poorest countries in Latin America. In the last 12 years, we had a very, very painful period because the poverty growth from 58 to 74%. 15 points of poverty was increased in that period. That means that we have a lot of problems in all areas. However, the sector that never stopped growing is the financial sector. The financial sector is I think, the first sector that grows more in the GDP in Honduras. It's logic because many people, entrepreneurs, and everybody needs credits, and credits are related with interest rate, and interest rate is the income of the financial institutions. So the financial system never is going to stop of innovate, because they know that from that point of view, who innovates or who moves first is the one is going to lead the business. Therefore, we think that what we are doing here, even giving opportunities to the poor people to come into the inclusion to the financial system, they are going to have more opportunity. We have seen that in the last few years, the real money is not being used a lot, just in the rural areas. But even in the rural areas, the people use the cell phones for transactions. So there is, like Adam Smith used to say, there is an invisible hand that is working on this fact, and people is doing their literacy about using the innovation and technology to make their life easier.
Okay.
Thank you.
Thank you. Thank you so much. Elise, you expressed your wish already, but you may want to add briefly.
Yes, can you hear me? So first, I want to thank AFI and El Salvador for hosting us on behalf of the FATF. Being here, I recognize how AFI is an agent of change, and it was very clear with the numbers you provided this morning. So my wish is that the FATF can partner with AFI and that we can continue to work together to bring tangible results for the real world. Thank you.
Fantastic. Thank you. Rogerio. Sorry?
Final thoughts.
Yeah, you have, but you can.
Well, yes. I would like to see, as I reflect about it, to see collaboration really at the highest level, as a public good, really. That everybody, regulators, private regulated, private sector, aim to. So whenever we don't succeed in collaboration, that means that public good that we aim to serve is not served properly. So that's what I would like to say, more awareness, collaboration as a public good for all of us.
Thank you so much. Well, I'm afraid that is it. So I would just like to thank all of you for coming here, for sharing so openly, for the active participation and the great insights. And I hope, really hope, that's my wish, we can discuss these discussions. Please join me in, celebrating this panel here with me. Thank you.